The situation is getting worse. 26 million people in the US are unemployed. The solution? Give some people $1,200 and give the banks billions. If someone gets upset, pretend like you didn't know what's going on. It's as if people feel they're winning. But look carefully, they're losing. Inflation destroys them, money printing ruins them, the heavy burden of rising taxation punishes them, and the magnitude of impending crisis keeps them in a state that they can't get out of. All cheered on by the public as they chant and beg for more of the same. You came here for the truth, so let me unveil that for you today. I have a very big video. Every single day, I'm looking at the information, I'm looking at the data, it's coming through so fast, I can't keep up, but I try to do my best to give you these videos. I've got a lot of economic indicators to discuss today. I want to look at the jobs numbers, of course. I want to talk about what's happening here with real people, how this affects you as the individual. Let's begin. The US economy has wiped out all of the job gains since the Great Recession. You've probably already seen the numbers out there, but let me just go through this quickly. I have a couple charts to show you. They have increased by 4.4 million in a week, and the current total is at 26.5 million. This is a massive amount that have found themselves unemployed. But what makes it even worse is that when you look at the information that's been coming through, there's actually a backlog of people who have filed but who haven't been processed. So this number right now today is actually much higher, even by the government's own standards. Then you look at the people who are still employed, but they've shifted over into something else. They're now an Uber Eats driver. They're now driving for Uber if they can find work. They're trying anything they can to bring some money in, but it's not necessarily enough to pay the bills. Sure, you're not going to end up on the government stats, but you're definitely struggling. I'll show you some examples of that. Here are the initial claims, and you could see that this has in fact been declining over the last few weeks, but we're still talking about over 4 million people in a week. And it might be hard to see, but right down at the bottom here, it looks like it's kind of just a line going across. This is the normal, quote unquote, normal amount that month after month you see them varying, but essentially all within a range. But as soon as all of these companies started to lay people off, we got this huge spike upward. Now they've been saying that, well, it's not so bad because we can kind of predict where the numbers are going to be, and it has been declining. Things aren't getting worse. But of course, as I have mentioned before, I do believe that we could actually see a leveling off where it would just continue with millions of people filing, or perhaps even a surge upward, as a lot of these companies right now, they're contemplating, should we just close down? Should we just end this whole thing? Every day they're going through that process. There are so many different companies, big, small, doesn't matter. They're all kind of deciding right now. They're probably going through the financials. They're seeing it. Does it make sense to file for bankruptcy and so on? Regardless, many people are going to be laid off. Unemployment in the US is swelling to levels last seen during the Great Depression of the 1930s, with 1 in 6 American workers thrown out of a job. At the bottom, you got the chart here, and essentially we're looking at the same information going back to the year 2000. However, you do see a spike right here during the financial crisis, but it looks like nothing in comparison because it didn't happen over a long period of time. It was just sudden. Everything is shut down. Here we go. This is it. Well, we'll see how this goes in the coming weeks if it does persist. So we've all heard about the V-shaped recovery and how this is going to be the way that things really play out. This is it. The Fed has got it. The government stimulus is going to happen. Don't worry, we're all good. Then we heard about the soft V. Well, it's not really a V, but it's kind of like a V. Then we heard about the U pattern. Well, okay, it's not going to happen with the soft V. Now it's going to be a U pattern. Okay, fine. Okay, now it's a Nike swoosh pattern. This is the one they're talking about here. But a new letter of the alphabet has come on the page, and that is a W-shaped recovery. That's right, a W-shaped recovery. Every letter of the alphabet is being taught here to the general public. It's complete nonsense, but I thought it was pretty funny. There are actually a couple points in here that I wanted to touch on. The reference of the W pattern here is basically saying that a wave of bankruptcies and defaults later this year could actually happen. As companies go belly up, a domino effect ensues, workers aren't rehired, suppliers aren't paid, and fear rises about who will be next to fall. Think about all the different industries that are being affected by this. You can't just say, okay, reopen and everything is going to be back to normal. That's not the case at all. People are still going to be worried. Businesses are going to be concerned as well because they're thinking, what's going to happen next month? I have no idea. I'm not going to go out there and start going full force into this if the demand isn't going to be there. Maybe they have a whole bunch of inventory sitting around. Why do they need to get their workers really working on stuff when maybe now isn't the time? So there's a lot of questions that need to be really answered before we can go into this any further. But one thing I'm not worried about is the banks. That's right, the banks are just so fantastic. Every single time there's a crisis, you're either going to get a bailout or you're going to profit. All the way to the bank? Well, take a look at this. The situation we're dealing with today made America's biggest banks even bigger. Some $1 trillion in deposits flooded in during the first quarter, with more than half going to JP Morgan, Bank of America, Wells Fargo, and Citigroup. That's right, the usual suspects. $1 trillion in deposits. I'll show you the chart here in just a second, but I just want to highlight the fact that this happens every single time. They don't get smaller. They don't get more secure. They don't get safer. I see those comments all the time. I see those articles all the time, and I see the people in the industry repeating the same nonsense, and yet people still don't get it. Well, I'm glad that you are here because you're one of the few who's actually willing to accept the truth. Total deposits, you can see the comparison of the first quarter 2020 to the fourth quarter 2019. JP Morgan, Bank of America, Wells Fargo, and Citigroup all enjoying more deposits. And what does that mean? More deposits come in, fractional reserve banking, it could expand that out even further. This is what's been happening all along, and this is a reason for them to expand. Hey, they don't even need to have reserves anymore. Why even bother with the whole deposit thing since they create money out of thin air, all thanks to this garbage system that they've decided to set up and force us on? But that's what we're dealing with. You can see the deposits at U.S. commercial banks changed from the previous quarter. Just to give you an idea of that trillion, it hasn't been like this since the financial crisis. So you would see some changes happening, of course, all the time, in or out, but there's a massive surge right now. Of course, the banks love that, and right here we could see something that proves they've won yet again. Credit cards start offering lower limits. Can you believe it? Have you ever heard of this before? Lower limits. They usually expand, but they realize what's going to happen here. There's going to be a lot of people that default, and they want to make it look like they are actually being prudent, that they are doing their best to stop it from happening, from stopping people from taking that risk. Well, why didn't they do so 6 months ago? Well, everything was fine. GPS, stop freaking out about everything. There's not going to be a problem. You don't have to worry. Major U.S. credit card issuers are starting to lower customer spending limits as millions of Americans are left jobless and struggling to keep up on loans. They mention more details in here. I'm not going to get into all of it. That's all you really need to know for this. People are unemployed. They're not going to be able to pay their bills. That puts pressure on the financial institutions, and of course the derivatives begin to unwind. A government effort to give Americans a break on their mortgage payments hasn't provided the relief many homeowners were hoping for. Of course, this is the way it goes. They try to make it seem like everything's going to be okay because we did this or that, but the underlying fundamentals are there for everybody to see. The stimulus package allows homeowners with federally backed loans to suspend their monthly payments for up to a year without penalty if they face financial hardship. Sounds good on the outside, I'm sure a lot of people are going to benefit from this, but check this out. But the law doesn't specify what happens after the so-called forbearance period ends. Many borrowers say that they are being told that they would have to make lump sum balloon payments. If you look further in the article, some of them have been told this, others say that's not the case, that's not how it works. They can simply figure out a way, change their payment structure, they'll work with them essentially. But regardless, that money, if it doesn't get paid back to those banks, the banks are going to have some serious problems with their derivatives, and it looks like that's the most likely scenario. That's why on yesterday's video, that quite frankly didn't get enough views, I talked about this issue, how this could easily expand into something that is worse than the financial crisis, the housing crisis, because it's not subprime mortgages that expands into these other avenues and we see the derivatives begin to unwind. No. It's everything all at once. Auto industry, airline industry, the factories, manufacturing, retailers, all at once. It's never been like this before. While some people are struggling, some people are hurting right now at this time, the billionaires, well, they're doing just fine. That's right. Bill Gates, Jeff Bezos, myself, Branson, all of us, we got our private jets and we are going to be okay. The billionaire class total wealth increased by 10% or $282 billion more than it was at the beginning of March. They now have a combined net worth of $3.2 trillion. It's so absurd. Try to make a joke about it. It's a little ridiculous. The gap between the haves and the have-nots is much worse than what we saw during the Roaring '20s. And now with this issue happening, it's going to be way, way beyond what we could ever expect. And what do? They try to create programs that go through these institutions, they go through government. They're all a big waste of money. They grow bigger and bigger and bigger, and they simply consume, and the average person doesn't get anything from it. They get the scraps. Now, I'm not blaming any of these particular individuals, whether it's Bezos, the guy from Zoom. They like to name names, but it's the system itself that's designed this way so that they can have it. Why does so much money have to flow the way that it does instead of a system built around a strong middle class? That doesn't exist anymore. There was a time for that, but look at the growth of GDP over time, slowly but surely declining. You don't get enough output anymore. And why? It's because the central banking failure is the reason why there are no economic detox periods. The Federal Reserve essentially stands in the way of all of that. As I've shown you so many times before, there's this sine wave, which you might seen in so many different patterns out there. This is a natural process, which you can relate to, so many different things. But the Federal Reserve tries to be there to stop it while it's at its certain point and send it back up. If you disrupt nature, you end up getting smacked in the face. Really quickly, I wanted to show you this chart. The cost of a barrel of oil in nominal terms, that's at the top, and the cost of a barrel of oil in real terms or inflation adjusted terms. Historically, going back to 1870, we have never seen anything like this. Think about that. All the way back from 1870 to the present, there's been a lot of volatility with oil. It's been up, it's been down, it's been all over the place. There have been crises, there have been periods where it has been subdued, but we have never seen anything like this. We are living through historical times. Real estate right now is something interesting. I haven't covered it that much. Basically, we're just in a waiting period. Buyers and sellers are kind of just hanging out, waiting for this to pass before they continue on. I think because of what's happening with the jobs, with the layoffs, and with the concerns about the future, we're not going to be so sure of what's happening, and therefore we could see a slowdown. Depending how bad the numbers are, depending what happens with the debt, that's going to determine specifically what occurs with real estate. So I don't really like to cover it too much because then we get into the speculation. The numbers look really bad right now on all levels. You can look at any type of numbers surrounding real estate right now. It looks really bad. But I don't necessarily just want to show you all that because like I said, it's a wait and see period, not necessarily anything to do with a particular problem as a result of something else. If towards the end of the year things haven't picked up, things look really bad, I think that the prices will come down heavy. And of course, regardless if we get mass layoffs that persist into the end of the year, then for sure this will become a trend. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. Thank you. If you want to see my information that I put out every single day on Instagram, on Twitter, on any other platform, just search me at The Money GPS. Several months ago, I created an e-course for everybody to learn how to sell online. Right now, it would have been very good for some people to have that secondary income, really would have helped out. Well, anyway, if you want to check it out, it's available to you for free as my subscriber at theamazongps.com. If you want to understand the financial system, how it works from top to bottom, the foundation, the history, the asset classes, how to make money, these 2 books give you what you need. If you want to check them out, there's a link in the description. If you want the audiobook, themoneygps.com. The situation could easily become worse than what we saw in 2008. I want you guys to watch this video. If you haven't already, definitely click on it and I'll see you there.